Hi everybody, this is a video that is a part of a series that I have been making on IFRS 16 leases. In this video, which is a continuation of my earlier video, I will be discussing the recognition and measurement of leases in the books of the lessee. My earlier video discussed the theoretical concepts that will help you to solve accounting problems. So I take up two solved examples. The first one is a very basic and simple one to get you started on recognizing the leases in the lessee's books. And the second one is more complicated, where I cover multiple adjustments so that you will be able to handle any question on this topic that you get in your exams. Right, in this video we go to the simple one. Okay, so whenever I have an accounting problem to solve, the method that I use is I read the entire question in one go very quickly to understand the gist, and then I summarize the important points. The lessee leases an equipment for 5 years. He pays 20,000 on the date of commencement. The first annual lease payment of 30,000 is to be paid at the end of the year. Thereafter, there is an increase in the lease payment by 5% every year. The implicit rate in the lease is not available and the incremental borrowing rate is 12%. How would this transaction be recorded in the books of the lessee? Let's summarize the important points here. So, first of all, the lease term is 5 years. We know that he pays 20,000 on the date of commencement. This is like the start of the lease, while all the other lease payments are at the end of the year. So this appears to be something like an advance lease payment. Then the first annual lease payment to be paid is 30,000, and this is payable at the end of the year. And they also say that it increases by 5% per annum. Finally, the discounting rate is 12%. All right. Now the solution, please look at, solved examples to understand the format in which the solution is expected to be given by you in your exam. In my case, I would prefer to give the journal entries to be passed in the first year, and I would also like to give the closing balances in each of the years of the lease term. Now, the working notes that I show you here are almost identical across all lease accounting problems for the books of the lessee. So, the first working note, as you can see here, is computation of the present value of lease payments. So, we see here that there is 5 years, and we are all putting in the annual lease payments. What they've said is that the first payment is 30,000 to be paid at the end of the year. Now, the timing of the payment, whether it is at the end of the year or the beginning of the year, is very important in computing the present value. I have created an earlier video on computation of present value where I have discussed all of this in detail. If you do not know how to calculate the present value, please refer to the earlier video before looking at this, because here I do not go into such detail. So the first cash flow is 30,000 at the end of the year. This increases, they say, by 5% every year. It's so easy in Excel. I know how hard this is while using a calculator. Now the discounting factor is to be calculated at the rate of 12%. How do we get it? 1 divided by 1 plus 12% raised to the number of years. Now this I copy across, and then this is how we get the present value. A sum total of this gives me my lease liability. So once I calculate my lease liability, I calculate the ROU asset value. Is it the same as lease liability? Not always. Lease liability is a component in calculating the ROU asset. So if you remember, on the first thing that has happened is we have paid an advance payment. And this advance payment, let's record it here. Advance lease payment debit 20,000 and bank credit 20,000. Then we record ROU asset. The ROU asset debit, let's not write the value right now. There is a lease liability which is calculated here, and we have also paid an advance, and that will be calculated here. Yes. Okay, so our ROU asset is then the sum of this. Okay, 2 entries passed. Now let's go on to the next working note, and that is the computation of the closing balance of lease liability. Now we know that the opening balance of lease liability is 118,202. Because the repayment is done at the end of the year, the first thing that needs to be calculated is interest at the rate of 12%. Repayment, you can pick it up from the earlier working note. The repayment in the first year is 30,000. The closing balance is the opening balance plus interest minus the repayment. Let's do the second year. That's the closing balance. Interest is at 12% on the closing balance. Repayment, pick it up from the earlier working note. And the closing balance is opening balance plus interest minus repayment. Now, magic of Excel, we copy it across. This is a way to check the accuracy of your calculation. The closing balance in the last year of the lease term should be 0. Over here, let's pass the entry. So there is an interest payment, interest accrual, I mean. The interest, you pick it up from here in the first year. There is a repayment, the debit, 30,000, credit also 30,000. The entry that is to be passed is the depreciation on the asset. So let's go to the third working note, and that is the calculation of the depreciation. The opening balance of the ROU asset is here. Depreciation is generally done on a straight line basis unless they specify in the question that another appropriate basis exists. So the opening balance minus the depreciation gives us the closing balance. Let's do it for the second year. The closing balance of the first year is the opening balance. Depreciation under straight line method, the value does not change. Depreciation under the straight line method, the value will not change from year to year. The closing balance. Now we can just copy this formula because it's Excel. This is another way to check your accuracy of your sum. The final, at the end of the lease term, the ROU asset value should be 0. We've not yet passed the entry relating to depreciation. Depreciation account debit, in the first year it's 27,640. Credit would be the ROU asset account. Same amount. And then we finally expense it out. P&L account debit, interest account credit, depreciation account credit. Interest is 14,148. Depreciation is 27,640. And the sum of that goes into your P&L account and gets expensed out. Alright, we come to the next part of the solution where we are giving the closing balances in the balance sheet and the amounts that should come in the P&L account. Under ROU asset, the closing balance for the first year, we've already calculated it here. It's copying from your working note 3. Lease liability, again, the closing balances we have calculated in working note 2. It's from here. In the final year, that will be 0 2. Interest, working note 2 again. The interest has been calculated. And finally, the depreciation, which will be the same amount year after year. There. So that is your solution. So we've come to the end of this video. I have made another video to solve the complicated example that I promised to you in the introduction. Please feel free to share your suggestions for improvement or any queries that you may have on anything that was discussed in this video. Thanks very much for watching this video. I really hope that you found this helpful. Bye.